But our next guest notes that competition is still fierce. Data from Redfin showing just 1% of homes changed hands this year. That's the lowest share in nearly a decade. Joining us now, Redfin CEO Glenn Kelman. Always good to talk to you, Glenn. Welcome.
Hi, good to be here.
It's very confusing what's happening in the market because it feels like things were warming up, but starts and permits were a miss.
Well, demand is low, but inventory is even lower. So if you look at the home builder index of confidence, it's up a couple of points. It's the 7th straight month of gains. So the builders are sitting pretty because no one else wants to sell their home. No one else wants to give up a 3% mortgage.
How long do you see that problem persisting? As long as rates stay high?
Yes, although there's some relief in sight just because about a third of the market, 37.5%, have adjustable rate mortgages. So those are going to reset in the next couple of years. You're going to start to see people move. There's also just a demographic bump that many millennials still want to buy a home. I think they're frustrated by the Supreme Court decision on student loan repayments, but they still got to find a place to live.
I mean, Diana Olick emailed me, and she noted that you guys recently reported that bidding wars are back, which does seem a little crazy because how can people afford to do bidding wars and pay over ask when mortgage rates are so high?
Well, again, it comes back to really low inventory. So this is the second straight month that the list price has been lower than the actual selling price. So I think it's 100.1%, the final price higher than the list price, which is just really unusual when you're in a market with rates near 7%. We've noticed that buyers are really rate sensitive. Even when rates come down 10 basis points, we get more demand on our website and more people touring homes, making offers on a Sunday night.
But are they using all cash when it comes to these prices over ask?
There's a higher proportion of people using cash than before, but many people are still borrowing. I think we're just at this bottom level of the housing market. You're usually between 4 and 6 million units selling, and now we're at 4.2 million units. There's just very little demand, but even less inventory. And so that's created a real crunch. The problem for us, obviously, is sales volume. But for buyers, they're still trying to find a place to live, and it's hard to do because there's so few homes for sale.
Meantime, Glenn, you know, the wave of migration that we saw during the pandemic and the effect on cities like Austin and in the Southeast, I just wonder if you're seeing some reversion to the mean on that front, whether that's in rental prices, for example, or even just migration numbers outright?
Rental prices are taking a step back, but very slowly. We have seen just incredibly strong demand for Arizona and Florida. I know it's been over 110 degrees there for a month. Florida's got all sorts of climate-related concerns, especially since insurers are leaving the market. But that's where people want to live. Much of this is just fleeing to lower tax places. That is a long-term trend that isn't going to stop.
So what's going to happen with pricing overall, rentals and sales, which we know the Fed is paying very close attention to and makes up such a big part of CPI?
Well, it's a tale of two markets. So on the purchase side, I don't think prices are going to come down much. Sales volume will. On the rental side, we do expect rents to come down. Vacancies are up. The builders have been very busy creating new apartment buildings that property management companies have to fill. It's been a real challenge for them because household formation, isn't happening the way it used to. More people are living in mom's basement.